Hi, I'm J.R. Honeycutt. I'm a staff writer at TickerTank.com, and I'd like to talk to you today about some ETFs I've been trading lately and selection criteria for the ETFs that we trade. First one I want to talk about is SPY, the SPDR S&P 500 Index ETF. SPY trades more volume than any other ETF in the market. The reason being that it tracks the most heavily watched index, the S&P 500. With all that additional volume in the underlying comes additional volume in the options, and for that reason, SPY is the most liquid option that exists out there. With a price of about $150 per share and dollar-wide strikes, there's also a ton of available options to choose from. So even in low volatility environments like the one we're in now, about 13% on the SPY, there's still plenty of ways to find trades when you want them. The availability of lots of strikes is really nice for the options trader because it gives you more flexibility when it's time to choose a trade. The next one I'm going to talk about is EEM, the iShares Emerging Markets Index ETF. The Emerging Markets ETF is also one that has high volume, around 25 million shares traded today. EEM is great because it lets you place liquid investments and liquid option trades on markets that are often illiquid, markets like Brazil, some places in Africa, South America, and Asia. These are markets that aren't typically known for having liquid investments and investment options, so the ability to trade those markets with liquidity is really attractive to us. The next one we've got here is TLT, the iShares 20-year Treasury bond market. And the Treasury bond market and TLT in general move inverse to SPY and the American major indices in general. The reason we like it is because, like SPY, it's high priced, there's a lot of strikes available, so you've got a lot of flexibility in choosing options. And then even in a low volatility environment, there's still plenty of room for us to wiggle around and pick the trades that we want. Like I said, TLT tends to be an inverse mover to the SPY, so again, it offers a way for us to kind of choose hedging trades against some of the other things that we put on. Big fan of that one. Another inverse index is gold, which is GLD, is the ETF for the commodity gold. GLD, another great product, high price, medium level volatility, usually a little more than SPY, and then the bonds have lots of strikes available, and it's something that a lot of people pay attention to. Gold is the most popular commodity, and GLD is the most popular gold ETF. So there's a lot of things going on there, and there's a lot of ways for us to trade that, a lot of different ways for us to put on option strategies as opposed to some of the lower priced, lower volatility indices. And the last one I want to talk about is IWM, which is the ETF for the Russell 2000 index. The Russell 2000 covers small and mid cap stocks in America, and the ETF tends to be a little more volatile than the larger indices like the SPY or the Dow, larger in terms of company size. The Russell tends to be a leader when there are market moves happening, tends to go up a little earlier in bull markets and down a little earlier in bear markets. So for that reason, being able to trade IWM makes us feel pretty good about getting ahead of some of the trends that come up. And again, IWM trades pretty high price, very near to 100, and there's a ton of options that are available for traders. So those are 5 ETFs that we like to trade and some of the reasons as to why. Again, liquidity is king. If we can't get in and out at a fair price, we're not interested in trading it. So we encourage you to pay attention to those things as well. For more information, you can always check us out at TickerTank.com, and you can read our blog at TickerTank.tumblr.com. Hope to see you around, and thanks for watching.